have B.G. Srinivas, the newly appointed president at Infosys, and we'll also be shortly joined by Srikantamurthy, HR head, as well as Ravi Kumar, the head of the insurance vertical. B.G., appreciate you joining us. Congratulations on your elevation. Let me start by asking you about the kind of environment and the picture that you're actually seeing coming in as far as global markets are concerned, especially when it comes to pricing. How challenging does pricing continue to be, or is the picture actually looking better when it comes to pricing?
Hello.
B.G., hi, can you hear me?
Good morning.
Can you hear me?
Yeah, now it's better. Yeah.
My question to you was, what is the sort of pressures that you're actually seeing on pricing? How challenging is pricing? You have seen client addition, you have seen some big wins coming in as far as this particular quarter is concerned, but how challenging is the pricing environment?
For the moment, the pricing environment looks to be stable as the clients are laying out their IT budgets for the coming year. Again, we see a greater degree of stability. So for now, we are not seeing any major pricing pressure, while definitely in the client context, there is a lot of focus on cost optimization. But at the same time, because the macro environment is stabilized, we see clients taking decisions both on discretionary spend as well as on the basics of running the business.
Yeah, so essentially saying that pricing environment at this point in time looks stable. As we heard from SD Shubulal also just a short while ago, that we are actually going to see budgets pretty much being stable as far as this quarter is concerned. There's lots of interesting nuggets that we are of course picking up on, and you know, highlights that we've been pointing out, which is really the major shift of the business from on-site to offshore, the impact of that in margins as well. Let me put that question now to B.G. Srinivas. B.G., you know, we've seen a major shift of your business from on-site to offshore, and that has clearly shown up as far as your margin picture is concerned. Two questions. Do you see more of this on-site offshore mix changing? And also, as far as margins are concerned, how much more can we actually see you squeeze by way of cost optimization, by way of utilization? What can be the margin picture up until the next end of next year?
Shireen, this is a larger discussion in terms of what we are doing on the cost optimization. It's not necessarily to do with one component of offshore on-site ratios. So there are several initiatives and there are several levers on which the margin hinges on. For example, while we can definitely shift the ratios in terms of offshore on-site, there is also a focus on internal efficiencies, improving utilization on-site, making sure that the individual roles are built for the specific task being carried out. There is also a lot of efficiency drive in terms of increased automation. So in this context, what Infosys is trying to do is to leverage all the efficiency factors and help improve margins. In terms of
how much more can we actually see margins improve? That is the question, B.G., because you were talking about the three-pronged strategy that Infosys is employing at this point in time to shore up margins. My question is, how much more can we actually see margins improve by? Because that's the one area where the street has been clearly positively surprised.
Shireen, that is also in the context of what we would see in the marketplace. While our focus on improved margin efficiency will continue, it's also determined by the pricing environment. If the pricing environment continues to be stable, we could definitely see some margin expansion, but it's very difficult to determine at this point in time. Also remember, we are making investments back into business. So that is something we will continue to do. So we want to make sure that internally we drive margin improvement efficiencies, but in the marketplace we want to remain competitive. We will have to balance that, and we will have to also balance the investments which we will make to business. So it's very difficult to say what exactly will the margin expansion be, because we need to look at all these three dimensions.
Okay, but you are alluding to more margin expansion at this point in time. B.G., let me also now ask you about the picture as far as the US is concerned, because that seems to have been the big worry, or at least one of the worries as far as this particular quarter is concerned, declining by about 0.8% quarter on quarter. What is the outlook now as far as the US is concerned? Europe has grown by over 5%. Do you anticipate that to continue?
So again, these are trends which need not be looked at specific to a quarter. But if you look at the full year, US market is definitely opening up, and there is definitely expansion in what's happening within the US across sectors. So and also typically Q3, which is our Q3, is the last quarter for our clients, and in the US, typically there is focus on making sure that they manage their expenses within the budget. There have been some furloughs, so I would just say that it is a bit more quarterly. It's not the complete outlay for next year. So we would continue to invest. It's the largest market in the IT services area. So next year we would in the US market as well, and this is something we are seeing across sectors.
You know, I want to talk to you about your client wins as well, BG, because that is again something that has positively surprised. 26 clients added above the 1 million bucket, 5 above the 5 million bucket, 3 added to the 30 million bucket, 4 added to the 50 million bucket, and 1 in the 300 million plus bucket. Can you give us a sense of the outlook as far as client addition is concerned, and specifically also in terms of the kind of contract sizes that we're actually seeing, and how confident you're feeling about that?
So within Infosys, as far as sales strategy is concerned, it's very clear that one, we have to focus on our current client list, and we are continuing to expand cross-sell services, upsell services, and that is the clear focus area. And we are seeing that result into movement of the client base from a certain level to the next level, and that we are seeing movement across from $1 million clients to $200 million clients. At the same time, there is a very clear focus by sector and by geography in opening new clients. And we have had some sizable deal wins, and hence you're seeing an uptick in new client additions as well as revenue growth. What I would do is at this point in time, I'd like to invite Ravi to add specific to his sector what he's seeing in terms of the client additions and client expansion.
Sure, Bijay, thanks. I would talk about the insurance space. Globally, we are seeing a flat to, I would say, stable budgets, and there is an upward bias in a few areas. Interestingly, what insurers are doing is they're kind of taking money out of their operations by cost optimization and expanding it into a few areas, few important strategic areas. One being leveraging business intelligence, big data for risk management, which is core to insurance. Most of us know in emerging markets, insurers have a chance to look at the deregulated markets. So a lot of insurers are actually trying to make the systems and processes global. And the third is, if you see, insurers have this challenge about per capita insurance spend, which is going down in some demographic segments, especially the Gen Y. So insurers are actually spending money on digital channels. So what I would say, smartly, insurers are trying to take money out of their business operations through cost optimization and actually spending money in the areas I just mentioned. So if we are smart,
anticipate, Ravi, then a significant addition in terms